What's up, everybody? Scott DiGregorio here, your mortgage guy, coming in with another episode of Financial Chaos. Today is the day. Today is the day the Fed is meeting today at 2 o'clock. I just wanted to reach out there, give everybody, I'm getting a lot of calls from people, a lot of messages from people asking me what the heck is going on. I know I've covered this in a few videos recently, but this is momentous, so I'm going to give you a quick recap, and then I'm going to tell you what to look out for today, which is different than what everybody else is looking out for, because there's a little trick there. So it is widely accepted that the Fed is going to cut rates today. There's a debate over whether it's going to be a quarter of a point or half a point. Statistically, they're saying that we're up to a 65 or 70% chance of it being half a point, although some economic data did come out this morning that was favorable. So we're going to have to see how it is. My personal opinion is it doesn't matter. All that matters is that rates get cut. I think this is a very, almost impossible scenario for happening. But if the Fed meets today and doesn't cut rates, the market's going to break. So I think just for that reason, I think they know they have to break. But here's the thing to look out for. So the Fed's going to release their thing at 2 p.m., which is the time they always do it. But after that is going to be the press conference by Jerome Powell. And while everybody is waiting for the 2 p.m. announcement to see whether they cut a quarter or a half, the insiders that know what's up are going to be listening to Jerome Powell's press conference afterwards, because it is the words in his press conference that will have a bigger impact on the markets than the actions they take. I'll give you an example. I've had this exact conversation with a lot of clients recently. If he cuts rates 0.25%, and in his press conference he said, look, this is the beginning of a rate cutting campaign. We feel that inflation is handled. We're going to continue to cut rates as we need to try to avoid a recession. That's one dialogue where, although the quarter point cut isn't great, the verbiage on the back end about a continued rate cut campaign and inflation being handled is extremely good for rates. On the other hand, if he cuts rates by 0.5% today, and then the press conference is filled with him saying things like, we feel that this is sufficient, we're hoping to not have more rate cuts in the future, that is actually really bad for the markets. So while everybody is focusing on how much he's going to cut today at 2 o'clock, the people who know what's up are really going to be listening to the press conference and diluting that. Now, I'm going to come back on later on today after those press conference notes are released and give you my take on it. But for anybody who's in real estate, thinking about buying real estate, investing in real estate, you're an agent, whatever, I want you to hear what I'm about to say, because I think it's critically important, okay? I have reported on this Financial Chaos series widely that it is going to be a very hot housing market as rates come down. Okay, if people can get a rate in the 5s without paying 2 or 3 or 4 points, the market's going to get very, very hot. In fact, Blackstone did a study where they calculated median sales price, median income, and today's interest rates throughout the country. And then they said if rates drop 1%, how many people will then qualify to buy a house that does not qualify today? And guys, their answer was 5 million new buyers. Now, to put that number in perspective, we only sold 4.09 million homes last year. So this is 125% more than all of the buyers we had last year. This is an enormous figure. And guys, that's only a 1% rate cut. You got to keep in mind, okay, I was locking people at 7.5%, 8%. Now I'm locking people at 6.5%. Some people are paying and getting in the 5s. So a 1% cut is minor. So here's my point. We are in the sweet spot. We're in the sweet spot right now where you could buy a house and ask the seller to kick in 3 or 4% to you. We could use that money to buy your rates down into the 5, 5.25, 5.5 range. I have several people locked right now in those numbers. But the market, so you can get the low interest rates that you're looking for, and the market's soft enough to give you that. Once those rates come down and the market gets super hot, well, then you're not going to have that flexibility at all. We could very easily see bidding wars. We could very easily see above asking price offers. We could very easily see sellers not offering concessions. We could very easily see sellers maybe not being willing to pay the buyer's agent commission. So right now, we could take advantage of these low rates that people want with a flexible market. And if you wait 3 months or 6 months, I don't know how long it's going to take. It could be a year, it could be 3 months, I don't know. But if you wait until that time and the market's screaming hot, guess what? You're going to lose out. So I literally feel that right now, just statistically speaking, mathematically speaking, is the sweet spot for people to get off the fence. I've already had 3 phone calls today with agents that a buyer had called them that have been sitting stagnant for a year. So it's actually happening. This isn't, this isn't conjecture at this point. So that is what I got for you today. Tune into what the Fed does, but tune into that press conference release afterwards, because that's a real market mover. And again, this message, if it's for you personally or for clients, share this and absorb what I'm telling you, because the math behind what I'm saying, it will be another example where I am proven historically correct. So that is what I got for you. I'm Scott DiGregorio. DM me with any questions that you have. I'll talk to you soon.